Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin. I'm not Joel Elconin. Joel Elconin is not here. See, I'm so used to saying his name. Just comes out. Dennis Dick is here, though. He's not on vacation. Good morning, Dennis.
What's up?
Hope you all are having a good Tuesday. Jeez, that was weird. Yeah. Okay. Back to it. Our guest today, maybe, but probably not Nick Shaheen. Nick is out of town. He's having some internet problems, so he's doubtful. If he joins us, it would be great. But he said don't expect him because he's having some internet problems there. So no Nick Shaheen most likely today at 8:35, which is unfortunate. We would talk to Nick in a couple of weeks. But I do have a guest at 9 o'clock, Dorrit Lowsen. She is the president and CEO of Change Finance. In the meantime, Dennis and I are going to spend the hour talking to you. We got a lot to get to on today's show. We got earnings season finally. We're going to talk about Virgin Galactic, obviously, coming back down to earth. We're going to talk about Disney. We're going to talk about pot stocks. We're going to talk about materials. Oh, man, we're going to talk about maybe some insider trading. We got a lot to get to. There's a lot. We got a CPI number today. Let's not forget about that. A lot going on today. So smash the like. Show us some love. Markets are higher. I mean, we're at all-time highs. What more is there to say, right? We're basically we're going steadily higher in stocks, steadily lower in crypto, and that's the story, essentially. So, Dennis, good morning. How was your Monday?
It was okay. It was a tiring Monday. I think it was a long weekend. I just felt tired all day. So I probably didn't trade as well as I could have, but probably should have went short space, I'll tell you that much. Holy mackerel. That was an implosion, not in the ship, but in the stock sense. It was a successful run, but again, we talked about this in the show yesterday. It's like, what do they have to look forward to? And then they kick out an offering right at the open. So something maybe we should have thought of. I mean, it's kind of like, when you get a drug company and just, to the newbies out there, you never want to go when it's a smaller company and it has a successful trial. You never want to go out and buy it that night, because often in the first 2 nights they come out with an offering, because if it has one trial successful, they need funding for the next trial. So you often see a pullback give you an opportunity. Well, Space had a successful trial, probably need some funding to finance before they actually start getting revenue coming in, and that's why they did the offering. So I don't know. That was $59 in the pre-market. It's $40 here now, so it went down all day. I think you got a lot of people caught long. I think I said it yesterday on the show when it was $50 or $52 that I'd sell it. I'm still not buying it at 40. If it got down back to 15 where I was originally played, I'd be interested. I don't think it's going like there. But I think you're going to find some support today, probably in the mid-30s. That's where we had some congestion mid-June. So I'd say 34 to 35. But tough trade. I mean, the easier money was just selling it yesterday. It's kind of in the middle of nowhere here now.
Yeah, so I had the chart up. I was trying to get off the stream at the time, and I didn't see the headline, but I saw the chart, and I was like, oh, it's really leaking now into the open. I didn't realize I had a 9:29 press release announcing an offering at a minute before the open.
Yeah, tough timing there.
Yeah,
Ransom, come on.
In hindsight, should have seen it coming. Something else I want to draw your attention to is just the strength, at least this morning, right? We were talking about this just before we came on there, and Mitch was pointing out that this stock tends to trade well overnight and then just gets destroyed during the day. It is trading strong this morning, right?
Yeah, it's coming back from the lows. Well, it got down to $37 over the night session here, so it has bounced off the lows. So it is showing. I know you see down 60 cents. It actually is showing some strength here in the pre-market.
Yeah.
Come back, but you're coming into overhead supply all in the mid 40s. So could you get to 42, 43? You could, but if you're trying to buy these stocks that are free falling just on little bounce plays, and it's tough. Like, you got to kind of go with what the overall trend is. So on this, I'd be selling RIP still.
And the overall trend is down, and we said
now.
Yeah, and we said yesterday, as this goes, so would the other space stocks. And you can look at Maxar. Look at that opening tick in Maxar. The exact.
We give some good information on this show sometimes.
What's Astra again? It's ASTR, right?
Yeah.
Space.
Yeah, they all were higher in the pre-market, and they all went red when space. You got to look at your leader. You're trading those Maxar, and you're trading the space technology stocks, and your leader starts to just tank. It's a good idea to probably get out of the sympathy plays. So relationship-based trading. There's money there.
Yeah.
So they tell me.
Can we talk earnings?
Mm-hmm.
Yeah.
Where do you want to start?
Do it. Goldman Sachs.
Oh, Spencer does it. Go. That's a good one. That's better than I do.
Thank you. I've been working on that one since last earnings season.
Good job.
So, all right, the numbers from Goldman Sachs. Let me pull it up in the Benzinga Pro here, so I can read to you, and then we'll go back to the chart. Q2 EPS $15.02 per share versus a $10.23 estimate. Sales of $15.39 versus $12.17 billion. So a beat and a beat. No surprise. It happens every quarter. They also approved a dividend increase. We knew that. That was previously announced after the last round of stress tests. What else did they say? Because, look, they beat across the board, so obviously they're going to beat across their individual segments, right? Net interest income was higher than expected. Investment banking revenue was higher than expected. I mean, that's just, they're printing money over there.
I mean, they always seem to print money. They always seem to beat. I mean, if we go back quarter, I cannot remember the last time Goldman Sachs. Maybe in the COVID crisis they missed, but I don't remember them really missing earnings very often.
It's fine. Now.
We got this in the Pro.
Wait, yeah. So you got to take COVID out, obviously.
Yeah,
that does not count. So if you take away those three prints from last year, you have to go back to like 2017.
Yeah, they typically beat, and they typically beat big time here. Everybody expecting them to beat had a huge reversal. Yesterday, the stock was down the pre-market and then closed strong. So it did run up into the numbers, high expectations. These numbers are just incredible from Goldman Sachs. And if any other company, like non-bank, was reporting this type of earnings, the stock would be up substantially. But because they just don't rally the banks on good earnings, they never seem to do it. Well, we're seeing a little rally here in Goldman Sachs. It's a small one. Their problem, they make too much money. I tweeted this out, so if you were reading my Twitter, I'm already spoiling that joke, but it's a joke, I'm going to say. But they make too much money, and this market likes stocks that don't make money, and they burn cash like AMC.
Well, one way to look at it, though, is look at yesterday. All right? They rallied into the number.
That's what we said.
Right.
I mean, there's serious alpha. I talk about this all the time. There's serious alpha buying the stocks, especially something like a Goldman that's expected to beat ahead of the report. And again, same story. We know there's an inverse correlation between the banks and TLT. TLT was actually green yesterday, which is why why some of the banks were down. It ended up starting to go red, but it really wasn't the player. That's an overall when there's nothing happening. We're coming into earnings season. TLT may not even matter the day before earnings because the people are going to be piling in, getting ready for that big Goldman beat. And that's exactly what you saw. You had a nice opportunity, obviously trading red in the pre-market yesterday, red at the open, and then they just turned around. They bought it all day ahead of the report. So you're exactly right. Expectations very high. I think they blew away those high expectations. The stock is still trading higher, but it's just it's funny. The banks, they can blow it away, and they don't necessarily just rip higher. Sometimes they go down on good earnings.
Yeah. And we can move on to the other big one this morning, which is JP Morgan, which, there's a theme here, everyone. The theme is that these banks print money. JP Morgan also beat Q2 EPS $3.78 versus a $3.20 estimate.
Big beat.
Revenue of $31.39 billion versus about a $30 billion estimate. So they beat that number as well. Investment banking revenue up 37% year over year. What else did I see? That was it. Net interest income was up. I mean,
the earnings were good. It doesn't matter. It's a bank, and they never rally them hard. It doesn't seem like on the good earnings. I mean, the Goldman beat was a lot better. So let's give it perspective. I mean, the Goldman beat was really impressive.
JP Morgan actually slightly lowered their net interest income guidance.
They'll try to find some reason to justify the sell-off there. So,
but
it's down a buck. I mean,
was up.
I don't know. The banks are it's tough. It's a tough call here. I mean, like I said, the easier money is playing the run up ahead of the event as opposed to trying to predict the move afterwards. You got to beat, on both stocks. One's down, one's up. Goldman's a huge beat. Naturally, you'd think, okay, if they're beaten by that much, they're going to talk about it all day on CNBC. It's going to go higher, but it doesn't always work that way with the banks. So I typically don't trade them after the earnings. I like to trade them before the earnings. So nice big run up. JP Morgan, Goldman Sachs, congratulations to the longs. I think the sell was probably yesterday before the event, so I didn't take the risk through it. Am I coming in here now that I know the information? It's a coin flip at this point in time because I've seen Goldman Sachs sell off on really good earnings before. I've seen Goldman Sachs rally on really good earnings before. So I'm not even going to try to predict the movement today in Goldman Sachs or JP Morgan.
And I like what RFCCW 949 said because Dennis, you were asking before we came on, well, what would happen if these companies ever missed? And I said, that's never going to happen.
I know. That's scary thought.
The RFC's comment, they can just move. These guys are balance sheet geniuses, right? They will always beat. They will always disguise.
Usually.
And this was my biggest learning from the financial crisis, and it's why I don't like investing in banks, is because at the end of the day, you and I will never know, and the Archegos thing proved this too. You and I will never know what kind of exposure these banks really have, right? And nobody will ever know. Only the banks know, and honestly, sometimes they don't even know, right? So you can never know what kind of
apparently Credit Suisse didn't know,
right? Because they had no idea, or they did, or they knew,
or they did, but
they
just chose to ignore it,
right? So you and I can never know what kind of real exposure they have. The balance sheet does not tell the story with these. So that's what has always scared me away from banks is like that thing.
What scares me away from banks and why I don't hold a lot of banks in my long-term portfolio is the financial crisis.
Yeah.
I mean, all these companies, and you can say, oh, yeah, but Citigroup's been a great stock. Bring up the long-term chart of Citigroup. Bring it up. I do this. We do this every quarter. Yeah. You know what, though? But we have new listeners, and it's a good exercise because people look at Citigroup and they think it's at all-time highs. Oh, yes, that's correct, actually. The all-time high is $600 on Citigroup. That's dilution. That's what normally happens when you dilute your stock AMC shareholders. That's what normally happens, but we're in this different environment where dilution isn't frowned upon like it used to be. I mean, you own less stock, less of the company. So this is typically what happens, dilution. Citigroup, $600 a share. It's $60. So if you've held Citigroup for the last 20 years, you're down 90% on your money. I don't buy Citigroup. AIG, bring that one up.
Exercise too. I think that was a bit of an unfair snipe of the AMC people because they just made us stink about an offering that got thrown out.
Okay, that's true. They didn't, but it's still been a lot of dilution happening in AMC. Right. They didn't dilute them further, which is good.
Right.
I've been warning you guys about AMC since 55. So obviously maybe I was warning you before that. So I was probably warning you at 30 and then it ran to 70. So I'm still warning you on AMC. I don't like people losing money. When they listen to the show, we're trying to help people.
What's the all-time high?
I don't think AMC is going to the moon. Sorry.
All right. All-time high in AIG is, what is that? $2,058. Yeah.
$2,000.58 back in 1999. So I held for 22 years. It's $47. This is why I don't hold banks. Now, if you look at Goldman, you look at JP Morgan's different story. They didn't dilute the stock to oblivion. But, Goldman has made money, but still, has that been a great investment? $10 or $200 15 years ago, and now it's $383. It's not even probably beating inflation. So these banks, despite making all of this money, and maybe there's going to be a catch-up trade here eventually with all of these, but the stocks just never seem to, been great long-term holds. I mean, I guess JP Morgan's been a lot better one, and it was always best of breed, it seems like. They learned from the whale trade before the financial crisis, which helped them. And they got Jamie Dimon, who's just a genius. So it's always been best of breed. And you can see JP Morgan makes new highs, 156. So that one's been a better one. But it's not necessarily just like, oh, yeah, own the banks and you make money in the long run. You didn't in Citigroup. You didn't in AIG. You haven't done great in a lot of them. You barely beat inflation in a lot of them. So it's been tech. We know in the last 12 years, it's been tech stocks. Maybe this is going to be the next 10 years of bank stocks. But I mean, Bitcoin's supposedly replacing banks. If you're a big believer in crypto and the evolution of money, and maybe I don't have a lot of banks in my long-term portfolio. I love trading them. I trade them all every day. I don't have a lot of banks in my long-term portfolio.
Well, since you brought up Bitcoin, can I read you the stat? It was I saw this on Wedbush, but they themselves were citing Reuters, who themselves were citing a report from what was it, a Crypto Compare. And Crypto Compare did this report and said that trading volume at the largest crypto exchanges, including Coinbase, Kraken, Binance, and Bitstamp, fell 40% month over month in June. Wow.
This is not surprising when you see prices fall substantially and stay down where they have for the last few months with crypto. You've got people who are like, okay, they've moved on. There's this whole group of traders that just move to what's hot. I mean, and you know what? That's not a bad thing. But that's where volume comes from, is a group of day traders that's always just evolving and moving to what's hot. And we have our daily social media viral stocks of the day. There's 2-3 of those, it seems like, every day that they just bounce around with. Crypto was the cool thing before the Saturday Night Live event, and it's been straight down ever since. I don't know what eventually turns around. I have a small piece of Bitcoin. I have a larger position in Ethereum, and that's it. I'm not a crypto trader. Again, if there's somebody that's posing as me on Twitter saying I'm going to trade Bitcoin for you, I am not. I'm never trading Bitcoin for anyone else. I don't trade it for myself. So don't send anybody money, because there's fake Dennis Dicks out there that are pretending to be me, and Twitter won't shut them down. I asked them to shut this last account down, but they said they're doing nothing wrong, despite asking my followers for money. This is where Twitter just drops the ball on some of this stuff. But I don't know Bitcoin. I'm not a Bitcoin and crypto trader. I have a little bit just for fun.
I love how you refer to it as like the SNL event, because Elon Musk hosted SNL on May 8th, and the all-time high in actually no, well, the all-time high was from April, but Bitcoin did top.
They all fell substantially after the SNL event.
It was on May 10th was like the high of that move.
Can you see the doggy coin chart? Do you have that one?
Oh, do we?
Do you have Doge?
Yeah, we do. Look, we got Doge.
It definitely topped out on the Saturday Night Live event.
I don't know. The chart's not working for me here. Let's do the old refresh.
I don't think it's $6,000.
Let's do the old refresh trick. See if the Doge thing.
Doge. I'm just curious. I don't even know what Doge is. I haven't looked at it in weeks.
Chart failure.
Where is it? 20 cents?
Chart failure.
How high did it get? 70? 60?
It got. I don't think it ever got to 70.
60?
Right now, it's at 20 cents. So
okay, so it hasn't been great either. I don't know. Is a lot of this stuff going to get hot again? It might.
Yeah.
The stuff seems to cool off for a bit, get forgotten, and then it seems like it gets hot again. So, like I said, I still own a little bit of Bitcoin, a little bit of Ethereum, a little more of Ethereum. I think eventually the story gets hot again, but who knows when. So, not fun to talk about right now. So let's go and talk other fun stuff. We've covered the earnings. Covered crypto land.
Well, we covered some of the earnings. There's a couple.
What else do you got? Let's go.
We got Pepsi.
Pepsi. Oh, that's all right. You know what? Pepsi's a great stock to trade.
I forgot about Pepsi.
I trade Pepsi. I'm the boring trader, right? I like to control my risk. It's more predictable. It's a consumer staple. It's a big component, in certain indexes. Like, you can put the Coke Pepsi, pair on to a certain extent, although they're kind of different companies. But I love trading Pepsi earnings. I love our Pepsi stock, PEP. So talk about the earnings.
All right. Well, I'll read you the numbers right from the pro. They were fantastic. EPS beat $1.72 versus $1.53. Sales 19.2 versus $17.9 billion. A beat and a beat. They also raised their outlook for the year. They raised their organic revenue growth guidance to 6% versus a previous guidance of around 4 to 5%. They said guidance implies a 2021 core EPS of approximately $6.20, which would be a 12% increase year over year. What else did they say? Restructuring charge. Beverage revenue in North America grew 24% year over year. Nice.
It's a breakout to new all-time highs. I don't like being short stocks making new all-time highs. It's light volume here in the pre-market. Let's see what it does in the regular session. Can the breakout hold? So 150.69, I believe, is the old all-time high. I'm just ballparking from the chart.
I don't know.
Yes. So we're about $1 above the all-time high. Can it hold above there? That's the critical level for it to hold. If your stock is breaking out, it's not a breakout if it doesn't continue to break out. So people will say, oh, it broke out, and then it falls $5 on them, and they're like, well, I bought the breakout.
All right, I have a dumb question then. How do you know if it holds the breakout? Like, what is the line in the sand?
The price, like, it starts to come back down and not be broken out anymore.
But when?
Well, I would say on this, it's yesterday's low, 148.78. But if this thing went red, like if this thing gives it all back and goes red, I don't want any part of it at all. So I would put my bogey at the close. If I'm buying this at 150, I'm saying hypothetical situation. I don't have a trade in Pepsi. I don't intend to really make a trade in Pepsi today. But if I was buying this at 150, 130 right now, which is where it's trading, I would stop myself out at the close, 149.51, because you never want to see a stock on good earnings start to go red, because then they've caught everybody and they can really go red on you. When your stock, even like Space yesterday, it's a good example. Just, not even thinking about the whole rock, just use the numbers and use those opening prices. I mean, yesterday, the close from the previous day was 49.20. Once it goes red, that's real trouble, especially after it was $59, because now you got other people that are caught there too. And obviously, it was straight down. The offering, again, people can say that, but more often than not, when your stock goes, it's up green and then it starts going red, you don't want to be in it. Usually, that's at least from my experience.
Okay.
We don't like them going red to green. There's a lot of failed breakouts. This has been the market not to buy breakouts in. It has been a contrarian market for a while here now. So where fade trade has been working.
Do you want to look at Fastenal, or do you not really care about that one?
Fastenal is always important in this market because it is the nuts and bolts of the market. It really is, because that's what they sell, is the nuts and bolts. But it's a key indicator for construction industry. It's a good feel. So I always like looking at Fastenal.
All right, let me bring up the numbers here in my handy dandy pro. EPS beat by a penny, 42 versus 1 cent. Sales missed by basically in line. Call it in line across the board.
Do you know what's happening? And I'm in, and at least in Canada, this is happening here now. But home building and building projects are slowing down here now. Why is that? Because the materials costs are simply too high.
Yep.
So people are holding off. So I've got a buddy that has a construction company. He says normally by this time I've got 20 calls for decks, like to build a deck. He's like, I've had 0 calls for decks. 0, because who the hell wants to pay these astronomical lumber prices? Even though you've seen lumber futures come down, they haven't come down at the Home Depot yet. They will, because they all bought, their inventories they're in it high, so it will start to come down eventually. And then you'll start to see those projects go up. But right now you're seeing a hold. People are holding off on non-essential projects because material costs simply got too high 3 months ago. Once material costs start coming down, which they're going to do, you'll start to see the stuff pick up again. So it's not surprising the Fastenal nuts and bolts isn't doing fantastic here in an environment you think they would. If material costs are going to continue to rise, there's going to be a little bit of a slowdown there. Again, as material costs start to come down, though, which they're starting to do, you'll start to see that pick up again. We talked about this with Lennar. We talked about this with the home builders when they were having earnings. And, and obviously some of them have come down substantially. I mean, look at KB Homes. This can be seen, it's $52. Everybody's back in May. Oh, yeah, home builders. Everybody's building homes. It's prices of materials. People are starting to hold off on projects, and you're starting to see what's happened with the stock. Now is the time, though, if you're thinking, okay, well, we're still in an inflationary environment. We're still going to have people who want to invest in their homes that, or maybe, as prices of material starts to come down, maybe you start to see a pickup in that. So actually, KB Homes becomes more interesting to me as it's pulled in here now, as opposed to buying it back in April and May, when you're thinking, oh, lumber prices, that's not good. High lumber prices are not good for KB Homes. Lower lumber prices are good for KB Homes in the long run. Yeah, so this is a chart on the screen of front month or continuous, front month lumber futures. So they officially gave back all its year-to-date gains yesterday. That will start to show up now in the lumber yards. It will start to eventually show up. Again, lumber futures, remember, is thinly traded. So it's not a great indicator. This isn't something that's like, it's thinly traded, and it moves around a lot. Like how many times, it's limit down, limit up. I mean, at least in the last, year, it's been pretty crazy. But, it is an indicator of what's happened. Obviously lumber prices at your lumber yards have gone up substantially when lumber was going up. So it's going to take a while for those lower lumber prices to feed back into your Home Depots and your Lowe's, but it's going to happen. So, how much is the lag? Is it a few months? It's probably a few months. You're probably getting to the point where you start to see your 2x4 your sheet of ply would start to come down in price. I would hope so anyways. I haven't really seen it close to me yet, but I think you will. And somebody else is saying it's not just prices, you can't get the supply. JD, great point. They're out of everything, at least in Canada. Like, they're out of everything. We've had, we're pre-ordering for my build, like, materials way ahead.
Yeah.
Because we know there's a shortage on stuff. That'll all catch up. I think by, and the COVID has a lot to do with that. People just, obviously demand went up substantially there and prices went up and supply went down and it was a mess. But I think that starts to correct itself too. So we're going to normalize there eventually. So I think, the pullback on some of these, companies is a buying opportunity. Fastenal is at an all-time high here, which is interesting considering, like a KB Homes has come down, and obviously nuts and bolts go into everything. So it's not just the housing industry, but I'm just, generalizing here. You've seen some of the material stocks come down. Fastenal is basically a material stock because it's the nuts and bolts that hold the materials. So I'm surprised actually that it was at all-time highs. I wouldn't buy it here. I think it's still a little bit, if I love the company, 2% dividend, I think it needs to come in.
And Mitch also pointing out the mortgage forbearance is still in play, but will come to an end soon at the end of the month. And so all these people who haven't had to, pay their loans, mortgages or otherwise, are going to have to start paying them. But then again, if the consumer is as flush with cash as I've been led to believe, then what's the problem? We are going to have CPI in 3 minutes, just as an FYI. Maybe go a little wide. Estimates are at CPI to increase 0.5%. And that's, what did I say, 5%? 5%. What did I say, 0.5? 5%. And that's what we're watching. So we'll have that in 2 minutes. And someone's asking, or a few people are mentioning cannabis in chat. That would be our old friend Sunday Night Chuck Schumer. A report from
Sunday Night Chuck. Nice.
Yeah, that's what we call him. At least in my house, my household growing up.
What's why?
Because he was always, if it was Sunday night, he was always on the local news. Always.
Sunday Night Chuck. I never knew that about Chuck.
Every single someone
talk to Chuck.
Somebody from the Tri-State area back me up here, but Chuck Schumer is always on the local news on Sunday night. If it's Sunday night, he's on TV. And so Bloomberg reporting that he will release a draft bill on cannabis today. So no, tomorrow. Excuse me. Tomorrow.
Fun.
So you got Canopy Growth trading higher.
Yeah.
You got the whole sector. OGI. OGI is actually nicely traded.
Yeah, you got the stocks or the ETFs.
Yeah, OGI had earnings too, but like Cronos.
Yeah.
Right, all trading higher on that headline here.
Okay. Oh, we'll keep an eye. You know what? Pot stocks have come in substantially from the highs. You got a level. And this is what we always talk about too on Cronos, for instance. I mean, you know where your out is. You got that little double bottom. We just put in 773, 773. Now it's up at 815. I'd like it lower. Like yesterday at 788 would have been nice when I leaned 15 cents. Now I've got to go down to the 773 and risk 40 cents on an $8 stock. That's 5%. It's kind of a little bit wider than I'd like to risk. But You see how I'm looking at it. I would stop myself out at that level if I was buying myself some Cronos CGC. Let's bring up that one. It's widely traded.
Yeah.
You got the low of the move, 21.27. You're only a buck off it. So if you think you're turning around with the pot stocks today, and I'm not necessarily trading these. I'm just saying you have a level to lean on. If it wasn't working out, I would stop myself out at the 21.27. So at this point, I'm risking myself about $1.50. So not as bad. $22 stock though. So you're risking about 6-7%. So it's a little bit of money. I think there could potentially be room up to that 24, maybe even 25. But I don't know. The trend is definitely not your friend on any of these stocks.
Oh, wow. We got a hot CPI number there. Core CPI up 0.9% versus the 0.5% estimate, or 0.4. I saw a few numbers, 0.4%, 0.5%. A bit of a hot number. Oh, yeah. Whoa. Hey, now. Okay, we got some movement.
Okay, I'm going wide.
Joel's missing the fireworks. Look at the SPY right there. Look at the TLT. Yeah, look at that. That's I wish I could.
Okay, I'm going on mute. You're on your own for a minute.
Oh, man. Look at Dennis. All right. Let's have some fun here. Let's go around the horn, all right? Look at all the banks. Now, okay, so let's look at this number a little bit earlier. So year over year, 5.4% increase. 5% was the estimate. So greater than expected on CPI year over year. Core CPI up 4.5% year over year. Look, man, it is hard, man. Inflation may end up being transitory, right? For all we know, but it is hard in the moment to think that. It is so hard to that's why it's hard to like believe the Fed, because when you're in the moment and prices are soaring, then god damn does it feel painful, right? So 5.4% increase in CPI year over year, 4.5% core CPI. Jesus. X food and energy, which is core. I just read that, so never mind. We don't want that. Let's go around. Okay, so we got SPY. We got our Qs. Look at tech. Let's go all tech, right? You can go Amazon, right? Go Apple right there, right? How's the Dow doing? Everything. Every stock getting hit on this. Jeez Louise. At the banks. Right. My TLT. Got movement. Oh man, I feel like that's the first number we've had real movement on in a while. Okay, so we do have a Jerome Powell testimony tomorrow, right? It's tomorrow and Thursday, if memory serves. Yeah, tomorrow and Thursday. He's testifying in front of the House. I would imagine they're going to talk about this tomorrow, because now that's what, 2 hot numbers in a row. All right, let's go to gold. I prefer looking at the ETFs just because that's my thing. What else? Bitcoin. nothing can stop Bitcoin going down. Oh geez. Oh man. Wow. Let's get off the 1-minute chart. Let's look at that 15-minute chart. Jeez Louise. We got some action. Holy cow. Fed, there's more Fed talk tomorrow. Well, easy Mike, there's more Fed talk tomorrow. He's testifying in front of Congress. I can't pull up the UVXY. I guess I could. Never do it. Jesus. This is not. I would be curious. Those of you in chat here who trade the UVXY, I'd be curious to hear how you do it, because it's such a high flying instrument, and I have no idea how to use it. Wow, I just got a Washington Post notification about CPI. That's how I know it's a big number. When the Washington Post is sending me push notifications about the CPI number, this is big. This is a big number. That's an indicator.
Yeah, one thing I want to bring up, Spencer, is that this could be the start of another rotation. You know, one of the things is I always try to get a little bit ahead of the rotations, right? And we had that huge tech run, right? I mean, if you look at the Qs and you look at the last 3 weeks, you can just see it as clear as day on the Qs. Now, one of the things that has been showing up is kind of weakness as we keep getting towards the top of these Qs. I think today you could get that tech pullback. It doesn't mean that tech is going to go down like massively, but it could be also an opportunity to look at some of these high flyers, like let's say NVIDIA, Microsoft, that were really breaking out, Amazon. You might get a chance to get them back down towards, let's say, old resistance, trying to become new support. So I'd really be paying attention towards those tech names taking the hit, as those have been the names that have been lifting the highest in the last 3 weeks.
Yeah, it's a great point. I mean, this is one of those things, right? Like, we always go into, the morning with one narrative, and sometimes the narrative can change mid-morning. So the question we have to ask now is, has the narrative for today changed based off this number? Or let's say for this week, right? Because yesterday was an okay day. I mean, we're at all-time highs in the Nasdaq, right? So, has the narrative now temporarily changed, or is this just a temporary buy the dip thing? Like, every dip is a dip to buy apparently.
I mean, one thing I'd point out is always look at these daily charts also from these major kind of indexes. They point to a lot of the time when they get towards the top of their trend channel, a pullback. And so the Qs are pushing on the top of those trend channels, same way the SPY is. And so a lot of times you get those pullback looks. It doesn't mean that it's going to maybe, let's say, go down 30% from here, but healthy pullbacks are an important thing in the overall market.
Yeah. Look at Bitcoin. Look, Bitcoin's really going here.
Woof.
Bitcoin is really going.
It's funny, gold doesn't play anymore, right? Spencer, I don't think gold does it anymore. I remember when I first started trading, gold used to go up on moves like this. It just doesn't even touch it.
It's supposed to, in theory. But I thought Bitcoin was an uncorrelated asset. I have no idea. I have absolutely no idea.
Hey, it's a learning game today. Learning game.
Bitcoin's going straight to 30.
I'm learning the hard way, buddy.
85.
You gotta go wide. I got boom, bot, and I was like, this podcast just cost me a lot of money.
Oh,
so I wasn't paying attention.
Sorry, Dennis.
Hey, well, how about we do one of these? Everybody,
That's one of those.
The like, hit the
not
subscribe,
paying the bills on
support
this.
the channel.
If you're sitting there and you're ready and you're not doing a live podcast, you probably make some money here, and I got rocked because of it. So man. I'm sorry I had to get off for 5 or 6 minutes and just control damage on that. You said go wide. I was like not really paying attention. I should have went wide. So you got to go wide.
Hey, you got to listen to the Spencer is real, man.
I mean, I didn't know it was going to be a hot number.
I didn't anticipate anything was going to move like that. I mean, put it in perspective, it's not a huge fall, but I was way too tight.
It's hard
just to pull
and it's hard to, like, even if, like what I was saying before, I don't know if you heard me, but like even if the Fed ends up being right and this all is a temporary thing, it's hard when you're in the storm to believe it, right? It's very hard to believe it because we're in the storm right now and prices can't seem to stop going higher. CPI, which we know is already like a taper number, right? It's already manipulated to an extent. I'm not saying you shouldn't believe it, but it's, you know, it's massaged. I think it's fair to say. This number is showing it, so it's hard when you're in the storm. It's hard when you're in the storm to believe that the storm is going to end. That's what the Fed keeps saying. Though we did see last time around, they had to walk back a little bit, say, yeah, it was a little more than we thought it would be. Yeah, geez, Louise, go to the TLT. I'm sure Bitcoin is still dropping. How is the SPY doing? All right, we've bounced.
TLT is not moving much. You actually aren't seeing like this separation really as much.
Yeah.
You are seeing oil picked up a little bit here, a little bit. Some of the oil stocks.
Didn't even go there.
Yeah, you're seeing Chevron just went green. You're seeing it actually. They just started hitting everything, so they haven't seen the separation start happening yet. And I'm still trying. I haven't even looked at the number because I was just trying to get out of tech.
Yeah.
It was ugly there for like, and literally still kind of ugly here. They're starting to come back now. I guess buy the dip is starting to win here, but wow. I don't know. We're bouncing around a lot.
There's Amazon, or there's Apple. Here's Amazon. There's Facebook.
How hard did Tesla get hit since it was making a move up towards the 680s?
A little bad. Everything got hit.
Yeah,
there you go. I was watching to see if it was going to get past 700s today. It looks like we have a little bit of a pullback.
All right.
Anyway, sorry, I'm very distracted here. I'm trying. If Joel was here, I would actually leave.
Everyone in the chat. I
would not be here right now if Joel was here, but I feel bad leaving you guys just hanging.
Everyone in the chat saying I need to chill. All right, fine. I will chill.
Here.
I will chill.
I'll get us on something else. Did you take a look at Mastercraft yesterday? MCFT?
I don't even know that one.
You don't know that one? It's a boating stock, man.
The
boating stock.
Okay.
Not a bad move yesterday.
In my defense, chat, when you're on the 1 minute chart, it messes. This is why I don't go to the 1 minute chart ever. It messes your perspective.
Oh, it's as a trader. If you're a short-term day trader, that was a big move. So I know you long-term investors are saying, "What are you talking about? We lost 10 points. What do you do that day?" But there's a lot of traders we talk to, day traders in here. That was a big move.
All right. Jeez.
That was a big move. I got hammered on that.
Get off me, everyone.
So it was a big move. There's traders, like if you weren't ready for that hot number, that wasn't pretty. So anyways, it's gonna be a tough day for me because I was doing the show and not paying attention.
Yeah. So now the question is, does the narrative for the whole day change? The narrative for you changes clearly, but
I don't even know if I can figure out the narrative. We were just chopping around here. Nasdaq just went, rallied back the whole thing. So this is tough figuring. Here we are. Obviously markets are chopping around a lot here, but Nasdaq is trying to go green here again. So we were down significantly like 5 minutes ago, and now we're actually trying to go green. So you're seeing shop around everywhere. You're actually it's a hard one to figure because you naturally look at the banks, but the banks are influenced by earnings here today. Yeah, there's balls juggling everywhere here. So and TLT is slightly up. So that naturally thinks, okay, the TLT is starting to rise up. That's actually good for Qs. It has been lately. And that's actually bad for banks. But then you got pretty good bank earnings. So, there's a lot of balls to juggle here to try to figure out, where price is going. But
yeah, a lot of factors. And fair to say the market is making up its mind in real time. The market does not know right now. It's trying to figure it out. What to make of this, because you've got competing narratives.
I'm trying to figure out what to make of it.
Yeah, like you said. How about that? How about energy? Energy up 1.5%.
That's where I'm looking, Spencer.
Every time I go to the pump, I'm spending more and more. The other day, I spent almost
gas crazy,
almost like
that's
$60.
What I'm looking for.
I spent almost $60 the other day.
No, gas is crazy right now. $150 to fill my truck in Canada. Right
now. I mean, I remember growing up when gas was like 50 a gallon. 05, 06, 07, that area, but it's been 15 years since we've been back there. But
I always love looking back at it because remember in the pandemic, everyone was like, "Oh, the demand will never come back. Well, oil will never be $60 again."
I filled up my car for like $30 a year ago.
It was nice. Let's just say that it was definitely nice.
That was the only thing good that was happening when we were in the middle of the COVID prices. It was cheap at the pumps.
You could take road trips.
I took a picture like in Canada.
Anywhere.
It was like 70 cents a liter. We haven't seen 70 cents a liter since I was like a kid.
Yeah, I know. But now
that was the nice thing.
Now we're getting back to where we were when I was a kid, which was like $4.50 a gallon, $4.30 a gallon, $4.
Yeah.
Did we talk some First Solar in the
we did not talk solar yet. There was a few.
Let's get into that a little bit.
There was a few things we didn't get to on today's show.
Kramer was really pumping the solar stocks last night. He was like First Solar. He was like ENPH. He also used GNRC as a solar play. And then he was talking Tesla as a solar play. And he was pumping those stocks hard last night.
Generac as a solar play?
He was pumping that as a solar play last night. Okay. But then, and which is interesting enough, is while just before he was ready to pitch his First Solar, Citigroup downgraded the stock, coincidentally. So it was like the segment was coming up. He's saying, oh, he's going to talk bullish on solar, and everybody knows it's going to be First Solar, right? Because it's the one he likes the most. And then Citigroup comes out, downgrades the stock. Like, not that they, it's just coincidence for sure. I'm sure they weren't predicting what Kramer was going to talk about. But if you were watching Mad Money, you kind of knew he was going to talk First Solar. And then First Solar starts getting hammered ahead of the segment. I was like, what's going on? I'm like, I would think First Solar is going to be rising ahead of this segment. I was like, oh, it's downgraded. That's not good news. And then you watch a lot of people buying First Solar on that segment. It was starting to go up to like $94, and it was just at 93 because the downgrade happened. And then it starts rallying up because Kramer's pitching, and I was like, these people are going to lose money because it's downgraded. And then obviously, it's I guess a battle of influencers, like you were saying. Kramer's pumping it up, Citigroup's downgrading the stock. It looks like Citigroup's winning though because the stock's down 1%. Full disclosure, I do have a small trading position left over in First Solar, but it's really small.
Can I pivot back to CPI for a second? I've been on with you guys, so I haven't been looking at the report too closely. But apparently, used vehicles accounted for 1/3 of the CPI gain. Dear Lord, it is the worst time in history to buy. It has never been a worse time to buy a used car than right now. If you're in the car, if you're in the housing market, it's bad. If you're in the car market, it's worse.
Wow,
it is brutal out there. Brutal. So I don't know how you play that. Whether you go to it's used cars, so I don't really know how you play that. Maybe like Avis or I don't know.
Is the goal being less cars on the road for the next generation?
I don't know. You play car with that, but dear Lord, that's huge.
Joel's smiling somewhere.
He's smiling because he's on vacation right now and just enjoying himself. So,
Hey.
Joel, if you're there, hi. He's going kayaking and biking and swimming and just living the dream, man. That's what I need.
Living the dream. Forget the CPI.
I know. I need a vacation, especially after this hot CPI number.
If you have Clinton Road says he has an 06 Honda Civic. If you have a used car and you the problem with selling it is you have to buy another one, right? So but if you have a car and you're thinking of selling, you should probably think harder about selling, because the used car market is ridiculous right now.
Boat market too.
There's literally, the more you read about this, there's just parking lots full of these new cars that are 95% done. They're just missing one chip. They're just missing the one chip. They're aside from that, they're almost done though, but they're not done. So they're just sitting there in these lots collecting dust in states across the country, in Michigan, Indiana, Texas, and they're just sitting there waiting for these chips to get here.
Why is it? Why do we have this this chip shortage?
Because there was a couple reasons, but one of them was that there was this fire at this factory in Japan that accounts for 45% of the automobile semiconductor production globally. There's one factory in Japan, and they had a fire, so they got knocked offline for a few weeks. So
that's the reason for the shortage.
That's one of the big reasons. Yeah, I mean, COVID's messing with everything a little bit to an extent too. But that fire at the factory in Japan is a big reason. So there's literally these cars that are they're done, with the exception of this one part that they don't have. So it's hard out there to be in the used car market as a buyer. As a seller, great. Thinking about selling my car maybe, but then what am I going to buy? So that's
and then the other question is how many people are going back to, let's say, a 2-car household versus a 1-car household? I know a lot of people went down towards a 1-car household, and I mean, it definitely changes the consumer's perspective.
Yeah. I mean, that's maybe.
It's a question. Definitely.
I can see that. And Chad's talking about the fact that our shipping ports are backed up, to the extent that you have these ships that are just chilling there waiting to unload for a week at a time. Right? They're just chilling, just because there's the ports are backed up, right?
Yeah.
So there's that as well, right? That's factoring in here. That the whole thing is messed up. Alex is agreeing with you, Mitch. They went to a 1-car household. Just crazy. Okay, sorry, I got off the first solar trade. So going back to that chart, so the Citigroup is winning this morning, outweighing the Mad Money pump from last night, and that's your story here. But solar did have a great day yesterday. Look at TAN. The whole sector was hot.
Yeah. JKS, the leader, still ripping.
JKS, you can look at Ryan, CSIQ.
Some of these are the Chinese solar plays, though, right?
Oh, it makes it even more interesting.
Why are those ones doing so much better? I'm not following the solar story closely, but JinkoSolar, I believe, is a Chinese solar play, and it has just been ripping. I mean, some of the other ones have been going up too, but holy, that JinkoSolar, I mean, that thing's look at where it was. It's $36. It's 62. I mean, the thing has up 80% in 10 trading sessions.
Yeah.
I guess it would be the underlying assets, the materials behind these solar panels that are causing these spikes.
Could be.
At least that's what my background would tell me.
I don't know, because you would think, oh, it's China, they would be under pressure, but in fact, it appears to be the opposite. Can we talk about Disney for a second?
Yeah, of course.
So we talked about this one yesterday. They had news out. Well, it actually wasn't out until later on in the day that they're raising. It was a report. I think Variety broke it. I think that they're raising the price of ESPN Plus $1 a month, $10 a year. Obviously, we are moving to a point where more and more stuff is going to be exclusively on these streaming platforms, whether it's Disney Plus or Paramount Plus or whatever. But more and more stuff, whether it's movies or live sports, is going to be behind a paywall, essentially behind a streaming paywall. So the market liked that headline. And it goes back to the conversation we had yesterday about the studios having all the leverage here and the theaters having none. And so that's what was behind Disney yesterday was the Disney Plus price increase. And so
I mean, it was a huge move, and we talked on the show that I like Disney. I wanted a pullback. I did not get any of a pullback whatsoever. 177. I still like Disney. I think it's the best of both worlds, meaning it's the reopening stock, the ultimate reopening stock if we do reopen. But if we don't reopen, they still have the Disney Plus firing all cylinders, as we saw yesterday as well. I like this on a pullback. I think eventually it's going to be $200 again. I had the one call from 170 to 200. It's back. Went back to 170. I would like to be long the stock. I need a pullback though. I don't like chasing.
I don't know if you're going to get it.
I don't know if I'm going to get it either. So you know what? That's okay though.
Yeah.
I mean, there's so many people that are like, oh, I got to chase this because I can't miss this. There's always another ship ready to sail. There's always another train ready to leave the station. There's no sense jumping on the moving train. Disney. Yeah. It's 170 3 days ago. It's 185. It just went up half of what I thought it might go in 3 days. So we need to pull back. I can't chase it up at 185 here now. Gets back. Maybe it's forgotten in the next week or two. Pulls back to like the mid 170s, 178, 180. Then it gets more attractive again. I don't like chasing. Some people make money chasing stocks. I always lose when I chase stocks.
And as Netflix has already proven to us time and time again, raising the price of your service, your streaming service, does not increase your churn, right? If anything, it gets you more revenue, but it doesn't. People don't cancel, right? Because Netflix has raised prices like what 4 or 5 times now, in the last decade.
Yeah.
And it doesn't.
It's such small raises on Netflix too. I mean, you're gonna pay $12 or you're gonna pay $15 probably. If you pay $15, you're gonna pay $17 probably.
Yeah.
I mean, that's really what it is. And like you've pointed out before, these things are all cheap enough you can buy them all. Disney, Netflix, the HBO Max or whatever it is. I mean, it's cheap enough. You cut your cable cord at $80 a month. I can buy all these services and I can stream everything I want. So I don't think streaming's going away. I think, the Netflix valuation obviously has always been an issue, but it continues to, make money and continues to try to grow into it. It's not as absurd as it once was. But I don't know. These are tough stocks.
I thought there was an analyst that gave it some love yesterday. I'm trying to find it, but
it's been so sleepy. Like you're on Netflix now, right? It's been.
I was actually on Disney, but yeah, Netflix.
I mean, we've been in this consolidation station almost like Amazon here for Netflix, between 470 and 550 for a year. It's got major resistance up here at 550. You're not even close to breaking out. So it's tough. It's kind of in the middle of nowhere here. I'd probably just keep playing that channel. It gets up in 560, 570 area. I'd probably be a seller. It gets down in the 470, 480 area. I'd probably be a buyer. I mean, that's what's worked.
I'll tell you one that might be a mover today, I think, based off of kind of what's been going on in the Disney is Comcast. Keep an eye on that.
I keep seeing these these rumors never die. I saw it again yesterday. I think it was Deal Reporter. But I don't remember who. I'm pretty sure it was Deal Reporter.
Lots of resistance.
Just trying to fan the flames of this Comcast Viacom thing that the Journal had talked about. So, look, the more you hear a rumor, the more inclined you are to think it's got something to it. But
it doesn't go if it's not going away.
It's not going away. It's not going away.
Mm-hmm.
This Comcast Viacom thing is not going away. So it came out yesterday again.
Also, I think what you said yesterday made a big difference, Spencer, in what you were talking about, how renegotiations for movies are going to start happening. Sure. I think this is really sometimes you get a question of story. Like, let's say, is streaming really going to take over the movie theaters? And we're going to have that perspective. I think yesterday was more of that confirmation of question. And now from now on forward, it's just more along how does the industry change now? And so I think you're going to start seeing a lot of these production companies getting a lift because of this. Because if they can make more money and not lose it out into the movie theaters, into the actual theaters, I think their profits are going to just go up.
Yeah. All right. Christopher Anthony Forsman is saying like NBC can't buy CBS. I'm not saying that Comcast is going to buy Viacom. I'm saying that there are now several rumors out there that it's at least been discussed. Obviously, if it were to happen, they would have to divest some assets, right? There's no way that would go through without Viacom CBS having to sell something, right, or spin off something. and I'm not saying it's happening. I'm just saying there have been whispers about it more than once now. The other side of that coin, though, is you can make the argument that broadcast TV ain't what it used to be, and so does it really matter if one company owns two of the major networks when? Frankly, when
everybody's going streaming.
Frankly, when everyone nobody has cable anyway. So what?
No, I know everybody's cutting the cord.
So there's that argument to be made. But I generally agree. I do agree with you, Christopher. I'm not saying it's happening. I'm just saying there are whispers of a Comcast Viacom thing. They don't seem to be going away. So take that for what it is. Somebody asked if we could talk lithium stocks. Yeah, LIT had a great day yesterday. A lot of that was. LIT was the ETF, but you can look at ALB. That was your big mover. ALB.
They've been blasting off the lithium. Yeah. That ALB, wow, what a move! Yeah. I screwed that one up. I sold that back during the COVID crisis, and that was a big mess up. LTHM, I do own that one. That was Jason Raznick pick, I believe Gene Munster pick from $5 or $6. I've still got it. That's been a good one. And then LAC, I have that one as well, and that's been blasting off too. So. Lithium's hot right now, but again, if you're coming in buying them now.
All right, Mitch, what's
there's a SPAC that's good.
Dennis. What do you got? SPAC
MP materials.
MP materials, yeah.
Look at
What's
that.
What's it been doing? It's finally starting to show some life.
That's actually, look at that. That's not bad.
It's a SPAC that isn't $10.
Look what happened. Dennis. There's some winners in there.
There are some winners in there. MP Materials. It's always been one of the Kramer's favorites too there. So is that one of your favorites too, Mitch, out of the SPACs?
I like that one and PLL. Remember when I called that one out?
PLL.
Back in the 30s.
Was that a SPAC?
I wish I still had it.
Was that a SPAC, PLL?
No, this is that Canadian though, right? Canadian play, right?
Piedmont Lithium. Lithium's been hot.
Lithium.
It's not going away.
Lit is one that I definitely think I should have had, Spencer, that I never grabbed on those big pullbacks when lithium started coming back down. And those are times where I really start thinking about that, hey, it's a good thing to have sometimes some ETF, especially when you're seeing kind of maybe these big pullbacks. You see those big pullbacks in April? That would have been an interesting time to jump into lit.
Look at that, lit. I don't know. Is that
lit? When it gets lit, it just gets lit, man. The name itself, the ticker.
It's lit right now. I'll tell you that.
So let's take it back to the overall market. 2 minutes left here for me. It's just this. There's a lot of balls to juggle here, and I'm trying to get a feel for it. I mean, we came all the way back on the Qs to scratch, and then we just sold it all off again. So this market doesn't know what to think here. The buy the dippers try to come in immediately, but they were rejected here in the last 15 minutes. So, are we going to continue to leak here? I think you got a lot of crowd. I think it's a crowded long, just like we had, just even talking from Monday, where we were discussing the potential that, hey, the SPY is making new all-time highs. But when you really look under it, like Tim did on Monday, I mean, there's a lot of, underlying issues here. So it's not going up on high volume. Is this rally, not necessarily a fake rally because it's a real rally and everything has been rallying, but it's been built on a few major names lately, like Apple's and Amazon's, breaking out for the first time in a long time. Where when you look at other sectors, it's like, oh, there's a lot of stocks that haven't been participating. We know the reopening trade has gotten very ugly. Yes, the bank snapped back yesterday. It's a big, important day for them. Can they hold on to the gains? I think, with the movement around with the CPI number here this morning, the banks are showing some strength there too. But it's a lot of sectors aren't performing that well, and that's been going on for the last couple of weeks. So does eventually, if we start to lose Amazon and Apple, does the whole market roll over? It's got the potential to do that. I'll tell you right now, though, it's a pretty ugly morning for a lot of stocks.
I'll tell you right now, every time I get bearish, I'm wrong.
Oh, yeah. Well, long-term, and this is to your long-term investors, is you try to stay the course as good as you can, but as a trader, you got to go both ways. I mean, we're eventually going to get I long for the day that, I'm going to get more volatile markets here because this VIX sitting at 15 is killing me, man. I like the VIX when it's like 25, 30. Then you're getting some movement. You're making some money. The VIX sits there and does nothing. It's hard to make money when stocks aren't moving. So this is a good thing for traders. You're going to get some volatility. You're going to get some action. How long this lasts is the question. It seems like we get a one and done, which we had, what was it last Monday? We were down 500 Dow points. We came right back. So, it's hard to just write off this market. I've tried to write it off before. Joel's tried to write it off before. It's hard, and like you just said, it's tough to be bearish. But you just got to be cautious. You just got to be a little more cautious, maybe, because we are long in the tooth, and there's some signs that a lot of sectors are got some sellers in there.
Yeah.
The weeklies on the Q's 0.7 green weeks. Just want to point that out. So,
all right,
a little overextended, and a little crowded to the long side.
It was an eventful morning for you, Dennis. Try to dig yourself out of that hole.
Oh yeah, I'm in a hole just because I got picked off. Bang, bang, bang. I was like, okay, that sucks.
Guys,
anyways,
hit the like.
I'm trying to work out of it. I'm hedged
again.
Hedged again.
Your head. I thought you were always hedged.
No, but when you go buy, you're temporarily like, okay, I'm long and I'm in trouble, and then you're trying to hit other bids to get yourself hedged out again.
That's
so, I'm like a hit on a tech stock. I'm like, okay, what other tech stock hasn't been hit yet? So I go hit that one, trying to get myself out of trouble. So, like I actually got hit on Okta. Like, if you want to know what happened, I got hit on some names, some big wild tech stocks there. But I got hit on OKTA. I had a bid out there and I wasn't paying attention because it had a rating. I think there was somebody, I don't know. I do all my research and more. I can't remember why I was bidding that, but I think it was analyst commentary. Maybe it was an upgrade, or it wasn't an upgrade, but maybe it was a buy rating from somebody. There's definitely was a rating. I'm
in the probe and I'm sorted.
I'm out of the trade now, so I can freely talk about it. That's why I was like just mentioning it. But I get initiated at Goldman Sachs with a buy. So I got hit, and then I'm like, oh, you don't want to add on anything when the market's tanking like that. But actually, I got hit, and then it bounced back up. So I actually made money on it. But there was like 3-4 other stocks I got hit on that I'm losing on. Okay. So it's never good when you're getting picked off. Like, basically what's happening there, market tanks 15 points and you're sitting up too high, you're getting picked off by high frequency traders that are like, doing the arb against you. And I just shouldn't have had those bids out there, but I was half-assed paying attention because we're doing the show and you said go wide.
Also, like, when is the last time?
I haven't been picked off in a while like that. I'm usually more cautious.
What's the last time market moved on a CPI like that?
Well, that's it. So you're just getting lazy. It was lazy by me.
Yeah,
that's all it was. It was lazy.
That's all it was. All right, guys.
I deserve to lose that money,
guys.
People always say, "Oh, I don't deserve." If you're losing the money, you deserve to lose it. If you made the trade and it's going against you, you deserve to lose the money. The market just is there's no like, this wasn't my fault. Oh no, you own the stock, it's going down, it's all your fault. I don't care who you heard that, well, this person told me to buy, or this person said they liked it. That doesn't matter. It's your decision. You're just taking information from everyone to make an opinion to buy or sell the stocks. I hate it when even with Kramer, everybody's calling him out and saying, "Oh yeah, DD. Okay, I had a bad call there." But if you're blaming Kramer because you bought DD on his call, that's your problem. You still took his information, his opinion. His opinion isn't going to always be right. In Kramer's case, it's not right a lot of times. Yeah. So I mean, you've got to hold your own. If you're buying and selling stocks, it's your decisions. It's your trading decisions there. Yeah. So we try to give trading ideas. We give some opinions. We're right sometimes, like yesterday on Space. We're wrong sometimes. But overall in this show, we're just trying to educate you so you can make those decisions yourself.
I guess the moral of that story is, if you make money, it was all you, and if you lost money, it's all your fault.
That's it. It's all on you. Your P&L. This is the most gratifying job in the whole world, where you are directly rewarded or directly punished for your own decisions. There's not a lot of jobs out there that you're directly hit. You're wrong, you lose money. You're right, you make money. I mean, there's not a lot of jobs out there. You think about, you can be wrong, in certain jobs, and it's your employer that's losing money. You might get fired if you're really wrong, I guess, but or you might get yelled at, but you're not losing money. Here, you're wrong, you lose money. You're right, you make money. And you know what? You're going to be wrong lots of times, and it's okay to be wrong. Just cut those losers.
Yeah, as Mike said, it's being wrong is okay. Staying wrong, not so
there
much.
You go.
Not so much. All right. Dennis, good luck rest of your day. We'll talk to you tomorrow morning. All right. I want to bring on my next guest here, Dorrit Lowsen. She's the president and CEO of Change Finance. We were having a conversation before we hopped on this morning, Dennis and I and Mitch, just about how it seems a bit contradictory that a company like Virgin Galactic is so beloved, when at the same time it seems like the importance of ESG is just rising, and the two are very contradictory in that way. My next guest is all about how individual investors can influence a company's ESG, and I want to bring her on now. Dorrit, welcome to the show. Thanks for joining us.
Thanks for having me, Spencer.
Let's start with what I just said there. Explain Change Finance and how your underlying belief is that shareholder activism can actually change things.
Sure, I'd be happy to. So Change Finance is a dedicated environmental, social, and governance, that's ESG investing firm. We launched our first ETF about 3.5 years ago with a real dedication, both to how we choose stocks, but also to what we do with our investments once we're invested. So we believe that how you choose your investments is the first stage of making, of driving behavior change. So what is a good company to invest in? What kinds of environmental, social, and governance performance are you looking for? But then also, what do you do? How do you drive those companies to be even better? So, divestment or not investing is the first step in how we use our influence as investors, but then it moves on to proxy voting. Do we vote our proxies? Do we use our influence as investors to tell companies what we believe is the right thing to do in terms of their policy? Do we engage directly? So we reach out directly to companies to express concerns, to provide opinion on how we think certain policy decisions should be made. Sometimes we do that one-on-one, as just us and the company, and sometimes we do it through coalition, working with other investors who share similar ideas. And then we can file shareholder resolutions. That's actually putting things on the ballot for other investors to vote on as well. One more facet of our shareholder advocacy is public policy advocacy. So public policy, government policy, affects how companies do business as well. And so we think it's important to use our influence as investors, not only directly with companies, but also to advocate for public policy that we think makes for better governance.
And in case you don't follow this space, about a month ago, there was big news on this front because ExxonMobil lost a proxy vote. This activist firm, Engine Number One, rather surprisingly got a few members on the board and essentially it went the activist route. Dorrit, I'm sure you saw that. What was your reaction? That was a big development for you, I'm sure, in this whole space.
That was a really big deal. Engine Number One got 3 director seats on the Exxon board of directors. These are directors who really believe that we need dramatic action on climate change. That's going to make a big difference. That sends a very strong signal to the market that investors are serious, that investors are looking at issues like climate change, that they believe those issues are fundamental to how a company does business. And I think in addition to that particular win, I want to highlight some other wins this year. As of the end of June, sort of towards the end of the key proxy voting season, there were 34 environmental, social, and governance proposals that had passed. Last year was a record at 21. So 34 just blows that record out of the water. And 17 of those broke 70%, whereas last year just 2 did. That means investors are really paying attention to this stuff. They are voting. They are sending a very strong signal to companies that issues of climate change, issues of equity matter to them. In fact, 8 of those 17 were in the 80s and 6 were over 90% support. And in another first this year, 4 of those 6 were supported by management. That's never happened before, that in fact, management at companies is starting to recognize that these issues matter and that they have to take action.
When you say investors, like what kind of investors? Is this coming from like the institutional world, or is this just another development as retail traders gain their footing a little bit more?
I think it's across the board. I mean, you can't get 90% of the vote on a shareholder resolution without shareholders of all stripes, certainly not without institutional investors, because they hold large shares of the stock. But the hedge fund that got 3 seats on Exxon's board, technically maybe it falls sort of into the institutional category, but it was very small. It doesn't have a lot of assets. It doesn't hold huge amounts of Exxon stock, but it was active, it was vocal, and it managed to circle up a coalition of other investors, again, of all stripes, because it really, to get the kind of support these resolutions are getting, it takes most investors, right? 70, 80, 90%. That's all investors of all types. And that means even individual investors can have their say. The vote matters. Those papers printed on really thin pages with really tiny print that you usually throw out. pause and take a look at them.
I was going to go there next. So, truth be told, I get these emails from my broker, like, you have a new, you have a new filing, you have a new form to look at, and I just delete. It goes delete, delete. What should like the average investor know about, like, I know you kind of already talked about it, but like I've never participated in a proxy vote before. I have no idea about that stuff. So like what should I know about this stuff?
Yeah. So those emails, truth be told, until I got into this industry, I did the same thing. I deleted them, or those days they were on paper, I threw them in the trash because I didn't know what they were. They're hard to read. But there are tools out there that can help you. There is a great organization called As You Sow that's really active in helping people understand those proxies and how to vote them. They give great guidance, particularly on the environmental, social, and governance issues that a lot of investors are increasingly concerned about. So that's a place where you can go. You can go to their website. They have great information throughout the proxy season to tell you what to look for. So if there are companies that you care about, start with companies that you know the best, that you care about, that are in the news, Facebook or Google or Virgin Galactic, Spencer, that you mentioned. Go see what As You Sow and some of the other organizations out there that give advice are saying about how to vote. Pick just one this year or two, and try it. You'll have to open those emails and follow the instructions to actually cast your vote. But it's not hard once you do that. And there's great guidance out there to help you think about which issues to zero in on and how to vote.
And this is the site. It's As You Sow, ASYOUSOW.org.
That's the one.
Yeah. Tell us a little bit about the Change Finance ETF. I had the chart up earlier.
Sure, I'd be happy to. As I mentioned, we are activists across the board. So we start by choosing which companies to invest in. We do that through a pretty rigorous rules-based approach. We are looking really to think about environmental, social, and governance factors as a way to mitigate risk for our investors, to select companies that are performing best. So we are fossil fuel free. We believe that divesting from fossil fuels is really essential for the climate, for climate change, for issues that our investors care about, but also as risk protection. So we believe that fossil fuel companies are simply not good investments. The business models are so tied up in the status quo. We believe they can't change fast enough. The energy transition is coming. Renewable energies are already as cheap or cheaper than fossil fuel energy. So the economic drivers simply are there for the energy transition. And we don't see that fossil fuel companies can change fast enough or without writing down significant assets. In the first 3 quarters of 2020, the fossil fuel industry wrote down $145 billion in stranded assets. Those are assets that are on their books that really aren't assets, they're really liabilities. That's fossil fuel reserves that they own that they'll never get out of the ground, or that they can't get out of the ground cost effectively. And there's a lot more behind that, we think, still to come. So that's one factor. But we go much further than that. So we also believe that investors that care about climate change, that care about fossil fuels, also care about a lot of other issues. They care about equal opportunity. They care about labor rights. They care about other kinds of pollution and emissions. So we consider well over 100 different factors as we think about our investment criteria, looking across the board at what makes good companies, both from a values perspective and from a performance perspective.
One of the biggest issues, maybe the biggest issue in ESG, even for people like me that agree with ESG as a concept, it's hard to get behind it when there is no one definition. I mean, there's one definition, but the way it's applied is not evenly applied. You can go the inclusive route and target companies that are doing good. You can go the exclusive route and delete the bad ones. And it's so what's the word I'm looking for? it's so like bespoke across the board, right? Everyone is so different. It's hard to understand. You know what I mean? You know what I mean? I mean, are we ever going to get to a point where it's a little more uniform, or is it going to be always just know what you own and I don't know, pick which route works for you, I guess.
Well, know what you own is always important. So we always encourage investors to kind of look under the hood. Whatever funds you're investing in have to publish their holdings, so you can go in and actually read through the list of companies they actually own and ask yourself, which do I recognize? Do I like them? Do I not like them? So that's like always a good starting point. Is there standardization coming? There is going to be more standardization over time. Some of that'll just be market driven through expectations. Some of that'll be policy driven. So for example, this year the SEC has called for input on climate disclosure standards. So I think we will see, and we're certainly seeing a stronger, kind of faster move in Europe in that direction. We will see some standardization around how companies report on their climate-related commitments and business. We're probably a little bit further out on standardization around some of the social metrics, but I think that will come eventually as well. We're starting to see some companies make public reports that they're already required to share with the Equal Employment Opportunities Commission, for example. So I think we'll see some standardization there. But then there will always be firms like ours that are trying to differentiate ourselves, that are trying to go beyond the basics, beyond the minimum, right? And do more and find the nuance in the market.
Dorrit Lowsen is the president and COO of Change Finance, and I guess the takeaway here is that even as it's never even really dawned on me that I could or should be interested in the shareholder voting side of being a shareholder, but you're saying that I, turns out shareholders are coming together and making a difference, and I think it's something to watch going forward. So Dorrit, thanks a lot for joining us, and we will be in touch and see as more things develop, because I'm sure the engine number one thing will not be the last time that we see a headline like that.
I don't think it will be, Spencer. Thanks so much for having me.
All right. It is 9:17 here, guys. We got about 13 minutes until the open. We're going to have David Green on in about 8 minutes or so live trading, so I'll hop off for that. Here's a chart of the SPY. We are trying to come back. Yeah, I'm not going back to a 1 minute chart. I go to a 1 minute chart and I start freaking out, and you all start, giving me grief about that. So no more 1 minute chart. Let's go to my movers tool. Guys, the movers tool, it's all populated, and I mean no offense by this, but it's all populated with like viral stocks, right? That I've never heard of. I've heard of Orbsat, but just like stocks du jour, right? OSAT, BLIN, which I've never heard of. I've never heard of Works. What is WROX? I have no idea what the stock is. SC Works. I don't know. CR here. Let's just do it this way. Just go to a chart within this tool or next to this tool. These are your big movers of the morning. Maybe some of them have news, but more than likely, I'm just going to go ahead and guess. Oh no, CRTD is moving. That is so annoying. Ugh. That's on the upside. What about the downside, right? MDIA, MediaCo, MTSL. We talked about that one. MTSL. Yeah, we've talked about that one yesterday. SLP is your big loser. SGOC, ZKIN. These are all. I don't have any filters on, so these are all really small names. I usually filter by price because I don't like the small names. Really, it bogs down the tool to me. AMC, interestingly, is down 5.5% this morning. I maintain it looks ugly ever since that breakdown, but I forgot to ask Dennis if he got my card. Shoot. All right, I have to write it down. Reminder, ask Dennis about. I'm writing it down now. Ask Dennis about Tim Hortons. Don't forget if I don't write it down. How do you get the scan in the screener? I'm not quite sure I understand. KP. So this is just this is the movers tool in Benzinga Pro. That's all this is, and I click up the top there to add some filters. What's going on with Nokia? All right, I'm looking at Nokia for a couple of days. Is there news? I don't even know. I mean, this thing is trading overseas. It's active. Oh, they actually have news. Thank you very much, Randy. They had they raised their guidance. Okay, or what is this? They expect to raise their guidance. They expect to raise their guidance. Here we go. It plans to elaborate on the Q2 and half-year financial performance and updated 21 guidance on July 29th. Prior net sales guidance was between 20.6 and 21.8 billion euros. The analyst consensus estimate is above. Oh no, I don't know how that compares because it's different currencies. Okay, so they're expected to raise their guidance. There you go. And okay, active overseas. Active this morning in the pre-market in the U.S. Nice call out there. Was that James? That was James. Nice call out. Yes, it is a Reddit play to an extent, but they've got actual news this morning. So there's that. Yeah, but yeah, I'm with you, Roy. Definitely be careful. There are so many charts that I like look at. There's one I was looking at yesterday, and I was like, oh my god, I would have loved to short this, but I'm afraid I'll get my face ripped off because it was like a Reddit stock. So I'm just not going to do it. We didn't talk about the long blockchain thing. That was on my list. So maybe we'll get to that tomorrow. Talk about long blockchain. Just to check up on how the banks are doing. You had a hunch, right, that the numbers were going to be great, and now it's impossible to say, right, because now you had CPI. But you had a hunch that numbers were going to be great, and the stocks weren't going to do a lot despite that. So they are all up this morning. I will be watching these very closely. Would not be surprised if they, end the day, relatively flat from an opening basis. Wouldn't shock me for a second. And then I also wanted to, I should have asked Dennis this, but would have liked his thoughts on the rest of the banks that have not reported today, right? Like Morgan, Citi, Wells Fargo, Bank of America. Now that we have one pair down, the expectations set, maybe, that trade is already over as well, right? Because all these banks traded with JP Morgan and Goldman Sachs today. So wouldn't shock me if these things like barely nudge on their earnings reports. Because now we have some confirmation at least. Like, oh yeah, we thought they'd be good. The numbers were good. Nothing really to see here. It wouldn't shock me if we get very little movement tomorrow and Thursday when these group reports. Check out Tilray. Are we moving here? Yeah, the pot stocks. Pot stocks are all having a good morning. Thank you, Chuck Schumer. We'll see what happens. We'll see if Bloomberg's report comes to fruition about him introducing that draft of the bill. When we looked at CGC earlier. Yeah. Good morning. How's my not my, I don't own it, but I own the stocks that are in this thing. So MSOS, forget it. CRLBF. No pre-market action in OTC stocks. I knew that. Duh. We have looked at BNY, right? BNY is Bank of New York. What's BMY? What's Bank of New York, Mellon? It's not BM. BK, thank you. Yeah. What are they tomorrow? Pretty sure they're tomorrow. Look at that. Yeah. Sideways action. Couple months there. Okay, that'll be a wrap for me here. Thanks to our guest today, Dorrit Lowsen, and was hoping to have Nick on, but he, as I said at the top of the show, is having some major internet problems where he is. So no go on Nick Shaheen today, but that is okay. Thanks to Dennis for hanging out with me or with us through that hot number. Thanks to all of you for hanging out. Thanks to Money Mitch for hanging out. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. me bring up a SPY chart as I hop off here for the stream. We got David Green going in a minute here. He will go until about 11 o'clock. SPACs attack, followed by the power hour, followed by Get Technical, which I have been told will be back today. Finally, we got the BZ Crypto Show at 2 o'clock. I'll hop on at the close with a special guest, not Joel Elconin, but I do have a special guest to hang out with me at 3:30. We got Money Mitch at 4 o'clock, the Cannabis Insider Show at 4:30, and After Hours with Ryan Rose Biani at 5, followed by Trading Nomadic at 7, and a Benzinga Pro demo at 8 o'clock tonight. Speaking of Benzinga Pro, if you want to learn more, go to pro.benzinga.com. If you want a discount on your first on your subscription, you can enter the promo code YouTube20, YOUTUBE 20. Get 20% off any Benzinga Pro subscription. Pro.benzinga.com. Any questions about Benzinga Pro, you can always email us. Email onboarding@benzinga.com. That's up on the screen right there. All right. It is 9:26, 4 minutes until the open. Mitch, you have one more thing you want to add? What do you got?
All right. Let me get my mic up here. All right. So one of the things that I wanted to talk about is a lot of times in trading, we run into times where we can't follow our plan, right? And a lot of trading has to do with looking back at your data and journaling. So one of the things that I've been working on, and I want to throw it out there for you guys out there. So give me feedback. Go ahead and hit me up at Mitch@Benzinga if you're interested in the idea or just want to throw out some comments about it. Give me some feedback. Love to hear it. So I want to start something called an Azinger accountability partner. So what this would really do is just try to keep you to your plan. So looking back at your data as you trade, whether this be paper or real money, and then going over the strategies that you're trying to accomplish, and then looking at it to see if you're actually trading that strategy. Because in the end, it's not for someone to tell you how to trade, but to more long look at your trading and see is if you're matching the plan that you're trying to attack. So let me know what you guys think about this. If you guys would like to have this as a part of Benzinga, so definitely hit me up. Mitch@benzinga.com. You guys can tell me in the comments that you guys would want to be a part of it or just what you guys think could actually gain you some advantage. So just wanted to put that out there.
Yeah, that's a great point, Mitch. And where can I bring up my screen? There you go. Like this is the Watch This and Pro. We have a feature in here where you can type notes to yourself, and I never use it, but I really should, right? Like I really should take in write a note here, bought on June, whatever, right? We have the feature. I should use it more. I don't use it enough. I know somebody was talking about Oatly in the chat. I know I saw it a few times. I'm sorry. OTLY, not one we've looked at a lot on this show. I will ask Gil Morales about this. That's my special guest at the close show. I'll ask Gil about this at 3:30 if you want to.
Good guy to ask.
Yeah. So I don't really have too many thoughts, but let me ask Gil. At 3:30, so tune in for that. All right, David Green is live. 2 minutes till the open. Everyone, have a good day. Have a good start to your day, and I will see you a little bit later.